Why do you look like you're in grade school again, Aussie? Like you literally look like we just booted up our first AOL AIM screen chat and
Aussie looks like middle schoolers in May of 2020 when they had to go online for school during the
he's
pandemic.
about to sit through Spanish class.
Yeah, exactly.
Honestly, this is my old university laptop. Electricity is a privilege, and a massive storm removed my privilege of electricity, and so I had to find an alternative studio this week for the episode, and
Yeah.
had to
So
use an old like 2013 Mac laptop to join everybody live today.
So I don't mind like bragging that we're pretty cosmopolitan because we bring you all world news as it happens. And world news tonight from NPR is Aussie was in Montreal, is in Montreal when this tornado hit. How often do you get tornadoes there?
Like every few years.
Like it's a
So
one-off or is it like a storm that produces a ton of tornadoes?
it's usually a storm that'll produce maybe one or two tornadoes, and they'll hit different parts of the city. Uh,
Tristan was on for literally 15 and a half seconds and noticed your 19 or your 2013 poster.
It's actually the first ever NFT.
And so yeah, I was whatever, and Jarrett was giving me shit that in Central Florida, like we get afternoon storms for like an entire season, and every single one of those storms generates tons of tornadoes, and we're the lightning capital, I think, of the world, like all through Central Florida, basically Orlando, and so I empathize that it's freaky deaky, especially when your infrastructure's not set up for wind, really. How long before you get your power back, did you say?
we don't know. There's over 200,000 people without power right now, and so we're kind of I'm in a little pocket of about 120 people, so I don't exactly know. I'm probably not that high up on the priority list right now.
No,
Um,
man. You work for as an analyst. You're like top
I know.
America's
I
top
thought
American analyst in Canada.
I figured I'd get lucky and have power before I woke up this morning, but no such luck. They I guess they decided not Crypto Bros stream was not you know wasn't good enough.
In hurricanes here in Florida, like when it goes out, you're like, all right. And you pull out the Coleman stove and you're like, that's how it is for the next 10, 15, 13 days. And you realize pretty quickly, like, I think in the last 15 years, we've probably had three major outages that lasted like close to 10 days. And you just you revert. It's funny how quickly society like will revert. And when we talk about economics like we do, I really do mean like we are a hair's breadth at any given moment from like falling into human chaos because humans don't know what to do. Dude, when we go into like the pandemic lockdown, I mean, you guys saw the shelves were empty of like toilet paper, like of all the things people grab at. And in Florida, I think I'm very grateful for the average Floridian who knows, like, I need a generator, I need a fishing pole, and I need a beach towel, and I'm golden, I'm gravy, you know?
The way you describe Florida is like the set of Castaway, you know?
No, during a hurricane when there's no power or resources.
I know, but I want to take this clip out of context and then just be like, this is Florida. You need a fishing pole, a Coleman grill,
A
a
generator
water
and a beach
filter,
towel.
a Bible, and a beach towel. And you're good to
Let's
go.
take it totally out of context and remix it with like what's the vocal thing Cher uses? The
Auto tune?
auto tune. We'll auto tune it.
Oh
No,
God.
we're in a jovial mood for several reasons. How are your bags as of the Ripple ruling yesterday?
I mean, I know you can afford a down payment on a new rental property thanks to the decision yesterday. I'm sitting decent. I didn't hold any XRP. That was my big. That was a mistake. But I mean, my Bitcoin and my ETH and my Matic are up a decent percentage today.
Yes, Ethan Matic. And we do need to touch on this. Is Matic going to go to Paul? And we need to talk about that and what that implies later. But yes, it's funny how much of this. So Aussie was giving us the breakdown, Jarrett, a moment ago of what this ruling might imply for other tokens. And we cut Aussie short because we wanted to save it for the show. But like, this wasn't a clear-cut ruling across the board. This was a partial ruling because the case is still ongoing, right? The case did not close.
It's still ongoing, but the ruling was pretty clear, at least in
This ruling.
yeah.
But the final ruling of the case overall and who does what. So go ahead. I'm sorry. Go ahead with this and kind of give us a rundown of
So
this ruling.
this was really interesting because of a very important statement that was made by the judge. The judge said that XRP Ripple is a digital token and that does not represent a contract or a legal transaction as defined within the Howey test.
That's
So
huge.
that is
Look at Jared's eyebrows.
Everyone buy crypto. Financial advice. There you go. Good God.
yeah, so this is next level in terms of what it means, because it means that the SEC can't be using the Howey test essentially against cryptocurrencies from
Specifically currencies.
yes, tokens, because essentially you're proving that it's the judge said that there is no it's not a legal transaction. It's not a legal contract or legal transaction as defined in the Howey test. And that's what they've been using to judge that. Essentially, that's the basis that the SEC and Gary Gensler have been using to justify that all cryptocurrencies are a security. So this is really massive.
So,
And that's why you're
is
seeing
this
everything
indicative that
raised.
someone internal is going against Gensler's will? Or, I mean, because I know Gensler's not supposed to impose himself, right, as someone ruling a case, but we know that his kind of mandate for cryptos in general is like shut the show down. But this is a nuanced ruling, and I saw somewhere else in the ruling, and maybe you're going here, Aussie, Jarrett, maybe you're familiar with this, but I saw somewhere else that the reason I was saying it's a partial ruling is that they were very clear in the latest declaration or whatever. Again, the case is not closed as I understand it, but he said what you just said, but then they also said there was no SEC violations for a type of transaction, but there were still SEC violations for institutional transactions. What is the new? Did you catch any of that? What is the nuance there, Jared? Do you know anything about that?
I'm going to pass this to Aussie. I haven't really read. I've been super busy the last 24 hours, so I haven't been able to dive in. I just shared the initial news, and then I just saw the bags start to just pump, but
Yeah.
I'm not up to date on it, so I'm excited Aussie is.
So I've literally got this piece of the ruling up in front of me on Twitter right now.
Yeah.
So it found that institutional sales were the offer and sale of investment contract. This makes sense because it's like selling shares of Ripple. That's how they were raising capital. So it makes sense.
It's like they were making an agreement with the institutional DEX or something to say, hey, listen, we'll give you a big block of X. And there's some, when you say contract, we don't mean smart contract. We mean either a verbal or business contract in exchange for something. So that amounted to an SEC violation. But anything happening on the exchange was literally just a currency / token available to the average user.
Yeah, basically it says that
Interesting.
it was not a fair notice defense for the other transactions and investment schemes or purchasing schemes. And so this is really important because if we think about a lot of other cryptocurrencies, if they just did a raise via like a public raise, maybe not, it didn't go to institutions, then they're avoiding the entire SEC argument, and the whole fair notice defense would then stand. And
interesting. So will this embolden token projects where they just go, oh, you know what? And they're going to rub this in anyone who sends them a Wells notice or anything like that. They're going to wave this in front of them, go, no, their lawyers are going to push back, and they're going to go back to maybe not pumping. Maybe everyone's still cautious.
I,
What's
I
the,
wouldn't say that this emboldens everybody right now,
Mm,
because there's two. I think most tokens have a institutional round. So
mhm.
we're like, we have seen Matic and other token altcoins that have been listed as securities pump,
Yeah.
but I think this nuance is not being talked about enough, and so we are
Mm,
gonna see a slight pullback at the very least in the market,
yeah.
um, because Polygon, ADA, all of them, any of them that did a, a raise with institutional investors, are still subject to those institutional investments do constitute securities.
Well, and if they know that they're an ecosystem, like Ethereum and Matic really need to be strategic here because they do have tokens, but they also have an entire ecosystem. They are a layer. And if you're a layer in an ecosystem, you're not out of the woods. And, in this relationship of we do have a token, ETH or Matic. I'm looking at the top performers, Stellar. Stellar's a token and it's a protocol. And I don't know if Stellar has smart contracts, as it were. It might operate on smart contracts, but it itself is a token. It's pumped at 47%, almost 50% right now over the last day or so. They seem to be projects that are fairly safe, but these dynamic layers, you're right. You just called out Polygon. They could be dragged into if they raise their flag too soon and go, "Yay, everything's out. Let's start pumping who we are." It's like, wait a minute, how did you roll out, and how does that affect your entire ecosystem? And they might still be subject to more. Um, what does Gensler call it? Legislation by action,
Enforcement.
enforcement. Yeah, yeah, yeah. Interesting. Interesting. Tristan, what does Tristan got here? Tristan asks, in your opinion, Aussie, what do you think timeline is for them to have standard regulation around new token projects?
I
Wow.
think this is where the Coinbase case is kind of fits into this whole puzzle. XRP just essentially helped define how institutional sales of cryptocurrencies are investment contracts, but basically sales or offerings on digital exchanges are not. So now we're getting to Coinbase and what constitutes a digital offering, and what
Mm,
constitutes, and uh, how a token maybe is offered to an exchange. How does that impact whether it's a security or not? Or maybe that transaction is a security. So uh, that, I think, is kind of the big answer that we might get from the Coinbase case. And so right now they've got until about mid-October for an SEC response. And I would assume that it'll probably take the SEC the full length of time. I don't expect the SEC to be absolutely astounded by this finding, by this ruling. I think that part of the reason why the SEC's been stalling is because they knew that this ruling was coming, and they've probably been backstopping working on legislation
mm,
in the background, and they've just been trying to hold off basically exchange pressure. So
mm,
having 100 new exchanges like come up, and maybe new exchanges like crypto.com doing new fundraising raises until they get this new legislation out in the open.
mm. Wow. Wow. This is big. What other cryptos are being pulled up directly by this? Like there's overall market sentiment in the greed index jumped. Yesterday, I think the greed index I was looking was like at 50. Today it's at 63. We're not like in a full bull. We know that. But Jarrett, what other tokens are you noticing that are being pulled up by more than just general market positivity? Which of these tokens do you think are being lifted because they consider themselves just like XRP?
We already mentioned it, but XLM from Stellar. I'm looking right now at the market. To be honest, I haven't really looked. And yesterday, when Coinbase said, "Hey, you know what? XRP is back on Coinbase," it really started to pump. And Grant, you said I thought it started at 60, but you were saying that it started at what yesterday?
46 cents.
Mine
46
was
cents.
looking at 46. Maybe I'm wrong. I have to pull it up again, but
Well, let me pull. I'll look at mine and I'll do one day. Yeah, I show 47 cents
okay.
and a high of 87 cents yesterday. Even
Yeah.
just
It's
so,
come
I
back down.
mean,
It's softened already.
It's at
yeah, it's softened
77
already.
cents.
Yeah, and I think it's going to come back down to 60. I mean, I think everyone got really, really excited. Some people probably did some, did some leverage and said, "Hey, I
Yeah.
think this is gonna 50% up in the next 24 hours," and they made some money,
Mhm.
and then they're gonna sell and come out of that and lock back in another trade. So I do think it will come down to 60. I didn't buy in yesterday. I'm also like I told you guys I used to have almost 10,000 XRP from 2017. I got in really early, but in 2021 I sold them all, or 2020 I sold them all when the SEC first filed their first lawsuit against XRP. But Grant, to get back to your question, I've just seen Stellar kind of go off. Everything is obviously pulled up, but tied directly to that, I really just think Stellar and XRP are the ones that kind of really blew up. I know Polygon had a really good day yesterday. Matic was also good, but I do think that this doesn't mean bull run. This is just like a really positive news day, and it's such a news driven market that doesn't surprise me that everything popped, especially XRP. So we'll see. Brian Naughton says Solana, which was mentioned recently as an unregistered security, but the
Yeah,
SEC is up 25%. Solana is still
that's
a project that, like, I don't know. Do you buy into it? Do you not? Because like it went up to 250, it's down to 27, so still has 10x to its all-time high, which normally all-time high is double or triple year on year, or like bull on bull. So like it has a lot of growth, but it's also a thing that keeps falling apart. D Labs took Utes off it. They brought it over to Matic. I mean, I don't know. What do you guys think? Hex had a good few days. Jesus, Hex.
Get out of here
My
with the
God,
X.
Tristan.
I Solana is my dark horse pick. If I had more liquidity, it's my dark horse pick. As just something that I would throw some money at, just because there is something about the Solana community that is pretty strong. Cardano had a really good day too. Was at up
Yeah.
20%, and that
Yeah.
was also listed as a previous
Yeah.
unlisted security. Near as well
Yeah.
is up 17.25%. Pepe had a $17% day. Good old
Yeah.
CDO.
Yeah.
Uh,
I'm still up on my Pepe, son.
and Near Protocol was up 17%. Those are some of the biggest winners from
I'm
the day
seeing
yesterday.
I'm seeing Lido
Yeah.
DAO Synthetics Compound, though it's down a little bit today. On the week, it's up 23%. I don't even know what Injective is. Optimism's up more than Near even. And none of these that I just listed, nearly all of them are platforms and not token only projects. So it feels like much of the market is just up on general market sentiment. Because, like, name me what you people think, what you guys think, or anyone watching are pure tokens. Like, they're just tokens. So, like, they're the safest from this ruling that anyone could be. Um, like, what's a pure token?
Lido
Apecoin.
DAO, Lido DAO is probably a pure token. Lido
Interesting.
is like it's the staked ETH ecosystem. Lido DAO is literally the. I am actually on a lower bunk bed. Allison, you are
Yes,
spot
Alice.
on. I am spot on. I am on a lower bunk bed right now.
Aussie's at summer camp.
Yeah, I got sent away to military camp.
His family finally put him up for adoption. He's just got somewhere.
Grant, I don't know. That may be too soon, buddy.
Too soon, buddy.
Yeah.
I
So
actually should go
Lido
back in.
DAO, because that's just like helping govern the Lido ETH staking ecosystem.
Yeah.
So that's like probably the purest token that I've got looking
Mm-hmm.
um, at the list of top reward tokens.
Yeah.
Synthetics and Injective. I know Synthetic is has at least partially to do with a DeFi protocol. So
Yeah.
I think it's at least partially used as a reward token, kind of like Curve and
Mm-hmm.
Convex.
Yeah.
And then Injective, I used to know stuff about Injective, but
Mm.
I'm blanking at the moment. Apecoin, I feel like Ape is probably one of the tokens that could run into actually more trouble based on this ruling.
Really? What do you mean by that? Justify that.
Apecoin was created by Yuga Labs.
Yeah.
Yuga Labs raised funds at least partially through uh, through investors, through institutional investments, uh, and so
Yeah.
they are probably the and ApeCoin has had institutional investment into other parts of the ecosystem to help build uh, the metaverse, I believe, for ApeCoin.
Mm-hmm.
So I think Ape is probably one of the tokens here that's at the most risk. The other thing that I think is really important to note, and Tristan brought it up in his comment a little bit, although it's a little bit to the side of what you might realize, but it's also if you think about Yuga Labs, some of their initial raise was done by NFTs, and this ruling does not cover NFTs.
Mm-hmm.
It's
Correct.
only digital tokens, and so there's no ruling on NFTs, and in some extent, I believe that NFTs could have a harsher ruling
Yeah. I think
than
so.
uh, tokens, especially if it's not just a PFP project. So
Yeah, because they're often promised benefits of return of some kind for the buy-in. I guess it depends on what sort of benefits get scrutinized by the Howey test. It's often called returns. And what's a return? Is access to my Bored Ape yacht in the harbor in New York City, is that a return or is that the benefit of membership? And then, well, no, we promised to airdrop a heavy metal or 1,000 units of ApeCoin. And it's like, if it's gray area, it's bad, and they could go after it.
that's it. So that's why I'm thinking Yuga Labs is one of them that probably is still in some hot water,
Mm-hmm.
because I think about NFTs that essentially they offer, hey, there's a chance that you get airdropped our next collection,
Yeah.
or or our next a little extra bonus piece if you hold this NFT, if you hold our original NFT, or you get early access to our next pre-sale
Mm-hmm.
by holding our original NFT. And I think that in some way could be construed as an investment contract.
Well, and
Uh,
that's interesting though, because like if you take this to TradFi and you are a member of an elite club, and that elite club sells a membership, and there's no promise of returns, but part of your contract is if one of the members creates a business or a project, you get first right of refusal. Meaning, if you're one of the 10 people in the club or 100 people in the club, they commit to not making a public offering until everyone in the club has kind of said, I'm not interested. Thank you for first right of refusal. Let's move on. And to me, early stage whitelisting is that. I don't know what the SEC is going to rule, but first right of refusal has never been a promise of return. It's always been a perk, an opportunity, but not a return because you could say no. Be like, no, I'm not interested.
yeah, so
You know?
this is potentially where you get into maybe if you offer your people whitelists to your next opportunity, that doesn't get ruled as an investment contract. But if you airdrop, you advertise that because you
Yes.
were a holder of this NFT, you get this airdrop, then there's a chance that is construed as an NFT, as a
Interesting.
as an investment contract, especially if that's being advertised publicly. If
Yeah.
it's something that maybe is just posted in their Discord in the holders only section, for example,
Mm.
and then it's just, hey, you're just making an announcement to your existing shareholders.
Yeah. Yeah.
Then that maybe, but if you're making it public on your Twitter or in the public announcement section of your Discord, you're trying to hype investment by getting people to buy these NFTs from other people or trade shares to get in, and therefore kind of like bumping your share price in some sense, and
Mhm.
therefore maybe that could be construed as a sale of investment contract.
Mm.
The especially if you kind of say, hey, we're airdropping 5,000 of these NFTs, the other 5,000 will be listed for minting at 1 ETH or 2 ETH. Then you're promising a return because you're saying, oh, hey, this thing is valued at 1 or 2 ETH. You can, if you buy this NFT, you can then go, I'll give you 2 ETH, essentially.
Mm.
Mm.
Have we ever looked? So I'm thinking about Polygon while we're talking about this, and how they're rolling to the poll token, and you've got like 4 years to like basically stick in your contract address for your Matic, put in your wallet address. They'll burn it and then give you an exact same amount of Polygon. So it's a 1-for-1 exchange, but it has smarter contracts. But that got me thinking about Ethereum and some of what, the more I try to answer this question about value investing in crypto, I'm thinking about this a lot lately, and like
Mm.
daily. I'm like, dang, like how do you do value investment of crypto? And you guys hit on some really cool stuff. I think it was Jared. Jared, were you the one mentioning Reed's law and Metcalfe's law?
Hmm.
Powerful things. Um, but have we ever, just rough question, have we ever looked at buying validators for Polygon?
I haven't for Polygon, but I would be interested. I mean, that's those are the kind of investments, and I'm just going to tie it back to Tristan's comment there. He's talking about fractionalization or tokens that represent real world assets, and I think that is the firestorm of
Eh,
what could get nailed by uh, by the SEC in the
So
next few
like
months.
this painting that is fractionalized, this Francis Bacon triptych or diptych that I brought up on my show or something. We talked about this. And it's the first painting that the painting itself is IPOing. And then they're fractionalizing it. Now they're IPOing in TradFi, which makes it a security, and they're selling stocks to it. And is that not what tokenization is?
It is absolutely what tokenization is, and when you're talking about tokenization of mines or real estate, you are that you are essentially promising returns. There's there's very few ways that I can see you advertising a tokenization of a mine or real estate without making it a security. You would have to
Hmm.
be very creative with your language, and even then the SEC might just say that you're using avoidance language to uh,
Mhm.
to create the myth that you're not selling a security. And so I think that is maybe there's maybe an NFT project that does something along these lines that is potentially the one that's going to get hit. But it could also be the tokenization of validators. I know several
Interesting.
projects that do that, and that could potentially be construed as a security because you're promising the returns from those validators. Uh, that that one, I'd say there's maybe some legal gray area because it's not that those returns aren't those returns are essentially guaranteed through by providing a validator, but is that it's like it's like offering a whole bunch of in a GIC that holds a bunch of different treasury bonds. Is that those returns are guaranteed by the treasury board, is that necessarily a security, or is that literally just bundling assets and facilitating access? That's a question mark that I've got uh, on that side. But value investing and Polygon validators, that's a great point. I mean, I think I, they're not as popular, but I'm sure maybe it just has to do with the returns. I don't know.
Jarrett, are you
Yeah.
seeing, like, with some of what Aussie's talking about and how the SEC, as it clarifies its rulings, and these things start to make sense. Like, it makes sense on, like, as soon as the ruling came out about XRP, there's a big sigh of relief, and we go, yes, that's a token. And then we're trying to play nice, so then we look at degens, people who are down with decentralization and DeFi. We then look at our projects and go, well, that's probably at risk, that's not at risk. And as these rulings come out, my question kind of goes to the higher level than about even these rulings, and asking, is the future of this that there really is minimally a DeFi space and this all gets rolled into TradFi, like this tokenizations that we're talking about? It's just securities. So why don't they just make it a stock? Why does it have to be anything else? Do you see that the world of DeFi gets absorbed more, maybe not entirely, but more into TradFi?
Yeah, we've talked about this a lot recently. I mean, I just think Bank of America is going to offer Bitcoin, Ethereum, and USDC by 2025. Write that down. You can say I'm wrong. They will, because they need the fees. And if this is what people want, this is what they need to do. So yeah, I think so. I think that like we talked last time about the sexes and dexes, I think decentralized exchanges are always going to exist, or swaps for stuff like that. But I do think that a lot of this is eventually going to be, the bigger projects will get just sucked up into banks. Everyone listening to this right now, if you have a smartphone, you have a bank app on your phone. But most people who could listen to this, like everyone listening here probably has a MetaMask, and they probably have a bank app on your phone. I would bet some money. But people who we know only have bank apps. But in the future, they may not even need a MetaMask to hold NFTs to do a lot of this. So I really think things are changing. And actually, the episode's dropping on Monday. We're more than blockchain. But I had on a guy named Chris Love, who's really cool. DJ, he has his own Discord where he drops alpha on investments, essentially, very all low cap gems, essentially. And he is part of Rainmaker, and Rainmaker is a DeFi product. It's a DeFi wallet that is essentially for the degen, for the DeFi person. It has no gas fees. They cover the gas fees. And I think we're going to see products like that will continue to grow. That particular product, Rainmaker, was funded by Y Combinator, so it is a very serious product. And I see products like that will sell for 100 to 200 million, and Bank of America will just buy them.
Yes.
And then they'll be in the suite.
Yeah.
So it won't be necessarily Bank of America, because no degens are going to be like, oh, we don't want to mess with the institutions. But lo and behold, it will be a Bank of America product. There's a product called Game Time, and I don't know if it exists in the UK or in Canada, but it's a product where you can buy last minute sporting event tickets, and it's super easy to use. The UX UI is like Cash App. It's so clean.
Really?
And I was trying to buy tickets about a year and a half ago for my dad. We went to a MLS, a soccer game in the United States, and we couldn't find them on Ticketmaster. Or we found them and they were ridiculous, because it was like $70 ticket, but the fee and the processing was like $20. I was like, hold on. Let me try this new app that I always get hit up for. Hop on Game Time, end up getting each ticket for like $50 with the $5 fee. So I save $35 for just looking around. And then when I'm checking out, I realize the Game Time app is owned by Ticketmaster. So they're like, we have to make the sale.
They're their
even
own
if it looks
secondary
cooler.
market.
They're their own secondary market. So that way, and there's a very famous place in the Lower East Side of New York City. If you guys ever are back in this, we next year at NFC NYC, we should bring everyone there. But it's this very famous Indian restaurant, which is run by exclusively Bangladeshis, which is a whole different story about globalization. And when you walk by it, there are these two doors, and there'll be guys out there that are trying to get you in the doors. Like they're like fighting for you. They'll literally pull you. They're like, come to our restaurant, come to our restaurant, come to our restaurant. It's the same restaurant.
Yes.
This is just marketing tactics that are time tested, So whether it's Game Time app or it's Ticketmaster, they're going to get you in the door. They're going to get your money. Yeah, they give you a discount. Who cares? They got your money. They get, one is greater than zero. So when I think about this long term, I really just think that Bank of America, like I said, will have the big three for me, which are Bitcoin, Ethereum, and USDC. And Chase will follow Wells Fargo, all the biggest banks. And I know I'm exclusively talking about U.S. banks, but if Brian and Allison are listening, Standard Chartered is huge on crypto. Standard Chartered said the other day in a memo, and Bloomberg covered this, that Standard Chartered believes Bitcoin will be at 120,000 per coin by the end of 2024. So
what?
Yes, yeah, and I that doesn't like seem wild to me at all. I mean, I've been saying it's gonna be 100 by January 1st. And I posted that thing on the Instagram the other day, and so many people reached out, and my friends were like, dude, that's crazy. That's still fairy dust. It's way too volatile. Don't touch it. It's
Volatile.
crazy.
They don't even know the definition of volatile.
I know. And I'm just like, I fall asleep at this point. But point being, I think it's all going to get sucked up. And then I think products like Rainmaker will be the game time apps for Bank of America. And I don't know if they're building for acquisition, but I think every company should be building for acquisition so that we're cutting down on efficiencies and getting ready to hand off. So I do think, though, that DEXs will continue to thrive on their own.
I think DEXs will. And I think more about, the philosophical principles of crypto. Like I was talking to our friend Jackie, and this question came up of like, what's our identity? Am I Mr. Crypto? And if anyone has watched more than 3 of our shows, they know that I'm the most diversely invested than the 3 of us. And so, am I Mr. Real Estate? And I'm like, no. And then I ran into a guy at the gym, and he knows a little bit about like my more spiritual background and some of the world travel I've done for world religions and stuff like that. And he's like, but you always talk about money. And I was like, yeah. And he said, why is that? Like, kind of like giving me shit, like spiritual people don't talk about money. And I said, money and technology are hand in hand to me. I said, money and technology are the kind of the crossroads of humans manifesting the unseen. And the same with religion. Religion is this bridge where you have one foot in spirituality, one foot in reality. So I like this stuff as a study of the human condition. So all that as context to my question about decentralization. We're finding from an economic incentive perspective, there is very little case for decentralization, except in the case of like cloud computing, right? Cloud computing is huge for decentralization. And then there's the authoritarian stuff that Jared accosted me about last Friday, like Grant, authoritarian regimes and decentralization of your data, or at least re-centralization of data on you is of the utmost importance, and I would grant that. But given the economic incentive structure for things like Rainmaker, I've got the website up. It's a gorgeous website, obviously targeted towards people who had considered themselves degens but don't like the risk of the degen world. And I could see Bank of America coming along, dropping 250 milli on this, and then just like calling it a day. So my question to either of you is this: what is the future of the value proposition of decentralization? Where does decentralization belong, given the economic incentives?
So other than cloud computing, the economic incentive for Bitcoin, that's the entire thing. It's the whole network's decentralized. You don't have to know, miners don't have to know one another to add value to the network and then get paid back in Bitcoin. It is the best example human history has ever had of a network where you don't know 99% of the other people that are part of the team, but you're all lifting up the same brand, the same thing. You're all playing part of the same game. So I think that Bitcoin is kind of the answer there.
And Bitcoin is a shining example. And the more we talk, I'm not becoming a maxi, but I will say Bitcoin is shining more and more as a very unique case study. Because, like, think of another. Litecoin had a shot, but what is it about Bitcoin? We have mimicked Bitcoin, we have duplicated Bitcoin, we forked Bitcoin, we've built on top of it and invented something like Ethereum. And from a value-based model, as my early modeling for value-based assessment of cryptos, Ethereum is like a whopper, like it's big. But what is it about Bitcoin that we keep coming back to and going like, aside from Bitcoin, it turns out Bitcoin is the exception that proves the rule. Decentralization works for it, but when I think of Rainmaker and Bank of America comes along and Bank of America says, all that decentralization shit doesn't work for us, and they're kind of building it in a way, I would guess, that has elements that could roll into TradFi, which is more centralized, obviously. So aside from Bitcoin, which you make a valid case for, is there any other true case for decentral, the economic incentives wise? Brian.
Yeah, Brian, Grant's about 6 months away from finally seeing what's
Seeing
been
the light.
seen.
Seeing the
Yeah.
light, joining the dark side.
Yeah, seeing the light to join the dark side. That's basically becoming a maxi. Aussie, let's. I want to throw this to you. What are the other examples? Because I mean, I guess. Do you think, Aussie? Here's the question: Do you think validators are an example of decentralization in the sense that there could be 1,000, 2,000, 4,000, a million people across the world that run their own validators and kind of support their network? Because I mean, validators are basically the Bitcoin mining, right? That is the proof of stake, right? That is people
I
who
would
are
say that,
securing
yeah.
the network.
I would say that validators, as long as they're not run, some projects run validators in very different ways, and so like there's like a selection process and all of that, and those I would not consider to be really decentralization because you're picking your team. Whereas ETH validators, anybody can become a validator, and so you don't I don't need Grant to say, hey, I'm a validator. I know you're a cool guy. Do you want to be a validator too? No. I have my 32 ETH. I can go become a validator without anybody's permission. And I think that is what makes it decentralized. I know that I heard from someone who was trying to become a phantom validator at one point. And you had to know someone who was a phantom validator to get the software to become a phantom validator. And that is not decentralization to me because you know who your team is. You're picking your
Yeah,
team.
I think maybe we should just kind of break down what we say when we use the word decentralization,
Yeah.
because I think you're spot on, Aussie. I think one of the biggest parts of decentralization is the permissionless landscape. You should be able to partake in the network without anyone else's approval, anyone else's cosign. You can come into the house party. You don't have to know someone that's there, like what you're saying, Aussie. And I think that's where Bitcoin or just having the validators, like if you, excuse me, the ETH validators, like if you have 32, you can just start validating and getting paid out. And I do think, and this is an episode that I've yet to do on More Than Blockchain, but I do think that is the future of passive income. I think this idea of how many doors do you have from real estate, which is the way a lot of people do it at all levels of wealth, to be fair. I think that in 30 years is going to be totally replaced by ETH validators, because you're going to be like, having validators is going to be seen as like having properties. Seriously.
Yeah. I do think
I agree with
validators.
that.
I do
I
think
actually been thinking about doing the same episode, so maybe
Yeah,
we
you
maybe
should
we,
both
Well, go
maybe we
ahead.
have a
double header.
yeah
Double.
double header or
Yeah.
or a More Than Blockchain decentralized crossover episode.
Yeah.
Yeah,
And
because I mean that one really needs a spreadsheet, just to like break it
it
down.
should. And you got to walk
It's
through the
just like
spreadsheet.
why I'm not paying off my loans and buying Bitcoin instead. I've got that spreadsheet sitting
I want a
on my
performance
computer.
report on that, by the way, because it's been like almost 6 months since you started that, right?
Well, that's why Aussie had to move.
Move to the bunk
His
bed.
power is out.
No, I've been there. I've been there. So, I guess the source of my question is this: as soon as Jarrett, you described an economic environment that an app like Rainmaker is just going to start getting bought up, and institutions are just going to start buying up these technologies, which are solid technologies. But the incentive is, as soon as it gets bought up, it's going to get stripped for parts. And some of the stuff that can go immediately is decentralization. So you're right. What we know as decentralization, the validator ecosystem, in Bitcoin's case, the computing power, And in Ethereum's case, it's almost critical to the network. No one's going to come along and buy Ethereum, right? But other projects that might have a strong decentralization case, but have not cracked the income model yet, are going to start salivating, going, listen, it's a mergers and acquisitions environment now, and it's getting close to being an M&A environment. And so, what if I start modifying my protocol to be more appealing to institutions who are going to come in and drop 100 mil, and I get my exit? So all this pain I've been going through trying to build the ideals, I'd rather just see a payday. And that's really what I'm getting at, is that environment is shifting, except for some notable exceptions. I'm not saying it is, I'm wondering if the environment's shifting.
So my question for you is, let's live in that world, and I don't know what Rainmaker's trying to do. It's, let's live in that world where they're like open to a merger and acquisition of 300 million, right? They're like, yep, that would pay everyone out. We're happy with that. So Bank of America buys it. Just because Bank of America is a centralized entity, if they have a product that allows people to buy and sell decentralized entities, I don't think that's centralized.
Okay, I'm gonna disagree, and I'm gonna hop in here.
Wait.
Rainmaker,
Time out, though. Time out. I want you to capture that thought, but I think Jarrett was at the edge of a thought that I want to make sure he adds. Jarrett, did you have a final thought? Oh, I'm
That's
so
it.
sorry.
That's it.
I
Yeah, no,
apologize.
that's it.
I apologize, Aussie. Go ahead. I'm sorry.
But the thing is, Rainmaker, at least from my understanding of Rainmaker, was never decentralized. It is a Web 2 company building in Web 3. In in at least my general understanding, it is a lot of these companies that we're talking about that are going to go through mergers and acquisitions for Web 3 tech are Web 2 companies building Web 3 tech. They were
Which is
never
exactly where I'm
decentralized.
going. Exactly, Aussie, but that's the exact thing. Like Coinbase is a centralized company, but they offer they offer access to the decentralized value network. That doesn't mean it's centralized for me.
Okay, I
Like if Bank
disagree
of
with that.
America's Web 2 and they buy MetaMask, they're still like allowing people to be able to access the decentralized markets.
I disagree with that statement because
Okay.
there are permissioned systems. And this is one of the things that we were talking about, how permissionless validators are decentralized, and that's why miners and ETH validators are decentralized, but phantom validators are not. And
So
so
it's like decentralization in your definition, Aussie, is not a standalone principle. It's dynamically and integrally and tied with permission versus permissionless.
yes, I think for a system to be permissionless, it's likely decentralized, and a decentralized system likely needs to be permissionless in order to be decentralized. So if you think about a DAO, if you think about Lido DAO, anybody can buy Lido DAO tokens and participate in shaping the Lido DAO ecosystem, the Lido
Okay.
ecosystem.
Okay.
You don't need anybody's permission to join that ecosystem or to vote once you've got your Lido DAO tokens.
Okay.
But if, let's say, I buy my Lido DAO tokens on Coinbase,
Okay.
I need Coinbase's permission to withdraw my Lido DAO tokens. If I don't get permission to withdraw those Lido DAO tokens for whatever reason, maybe my account's only 7 days old, and so I can't withdraw because it's been less than 7 days since I deposited my funds, or a multitude of other reasons. Someone reported my account for fraud, and so they're blocking my withdrawal. I can then therefore not participate in the Lido DAO ecosystem and participate in the DAO because I can't, basically, because a permission system is blocking my access to that permissionless system until I can buy directly on a DEX, onboard my funds onto a DEX without anybody's permission, and buy and have it sitting in my MetaMask or other wallet, it is still centralized up until the point where I have permissionless control over my funds. It is still a centralized system.
So that raises a question, or that takes the thought further with this concept of in the merger and acquisitions environment, what is the place for decentralization? Aussie, you're contending that, well, some of these things that are being bought up or might be bought up, they themselves, in your definition, aren't even technically decentralized. Jarrett, do you think that there are, even in Aussie's definition, do you think that there are decentralized projects that might still get acquired that will maintain their decentralization, even though they might be owned by a centralizing force?
Yeah, I mean that's my argument with Bank of America gets Rainmaker
Or
because
something
Bank of
like
America
it.
would be
Aussie's countered that,
centralized
but
and
something like it.
Rainmaker could still be decentralized. And I'm trying to, because Aussie's basically saying if it's centralized, it has permissions. If it's decentralized, it's permissionless. And that's like interesting because like the product of Bitcoin sitting on Coinbase when you buy it is still a decentralized network. But Aussie's saying because I have to wait 7 days until my bank clears, it's not until I own it free and clear. There's a question here about ownership, decentralization, and permissionless.
Yeah.
Centralization, decentralization, ownership, non-ownership, and then permissionless, not permissionless, permissions, not permissionless. That I think we should probably explore further because I think it's pretty fascinating.
Well, and
This idea,
that's what I'm
and
getting at, because where's the place for these things when, like, I'm super curious about human nature. So when human nature has an opportunity to sell their project and just get out from under the weight of building
yeah,
because there's, a centralized institution is flush, do principles really go out the window? And on top of that, what we're starting to realize is, put under heat and pressure, do cryptos principles, decentralization, trustlessness, permissionlessness, do these actually stand alone? And I think what we're finding is, only in the shining example of Bitcoin, nearly every other protocol, the lines are getting crossed. As Aussie is pointing out, no, these lines are crossing.
I
I
would
said 6 months,
disagree.
Brian Naughton. I take it down to 5. He's on his path. He's in his Jedi training right now.
What do you say?
So I'm gonna disagree slightly. There are DeFi protocols, and I'm thinking about Trader Joe. There is
Mhm.
a centralized team around Trader Joe, and I'm not 100% like there are some mechanics I'm not 100% familiar with, but they hold Joe token and they can sell that Joe token for like founders, and they can get their exit either way without not necessarily the purchase of um a Web 2 company. If Wells Fargo or otherwise decides to could buy out the development teams or the founding team's stake in Trader Joe by buying their tokens, as long as basically uh, people that hold the Joe token can vote on how the development of the Trader Joe ecosystem goes forward through the holding of the tokens and voting on the development, it is decentralized now. And if anyone can put
Interesting.
forward a proposal and anybody who holds the token can vote on the proposal, then that that is decentralization. Even if Wells Fargo or Bank of America or anyone else maybe owns the founding share of it and maybe might be funding the development of it, as long as Wells Fargo does not have the final say on all the development and how development happens on Trader Joe, then it can still be decentralized and can still be permissionless.
So decentralization, what I'm hearing you say is decentralization as a foundational principle for DeFi or for Web3. Decentralization is being, the definition is being narrowed to the decision making of development
I'm
on the
using that as
protocol?
an example. If we think about curve and convex, if you hold curve and convex, you can, as a permissionless system, vote on which pools get incentivized.
Mm-hmm.
There's a whole thing called the curve wars
Mm-hmm.
to try to leverage that voting.
Mm-hmm.
That is a permissionless system that is decentralized because it's as a single individual holder, I can vote and make a decision on each week what is being incentivized.
Mm. Yeah.
Uh, and so it's not necessarily development. Development is one way that we can think about it because a lot of
Oh,
Web3 tech is still under development, but you're affecting decision making or anything. So for Trader Joe, it could be the same thing. Uh, you can
Brian,
Yeah,
incentivize.
Brian, the brain here.
Oh,
Brian has a really good point here, and then I want to build off this point. Brian says decentralization is a spectrum or a continuum, not necessarily a destination. There's an argument that even Ethereum and Bitcoin are centralized at the protocol level in terms of their development. And that's kind of the thing I wanted to throw out, that you can have a decentralized network like Ethereum that's still centralized because we know that like 6 people own a crap ton of the overall ETH. I think including the Ethereum Foundation has, a pretty large percent. I mean, anything over 3 or 4% on a couple billion, on what, $200 or $300 billion network is a lot, right? So I think you can still have decentralized like this. I think it's fluid. I think to try to pin it down, there's 22,000 cryptocurrencies out there. You will find an example that cracks whatever rule you're going to try to make on it, So I think it's kind of tough. But I do think, for me, the only one that's truly decentralized is Bitcoin. And Brian saying, sure, at the protocol level, sure, okay. But as far as the way the actors play nice with one another, I think it's the only one.
Well, I guess my whole point is thinking about getting through the next bull run, which I believe will be an institutional bull run. And that, I think, will mean that it will be the moment crypto gets established into mainstream vernacular and understanding. But I think that will also mean there's a major cooling in the degen world, which means those who still hold on to cyberpunk and cyberfunk principles at the principle level, they're going to stay on dexes. They're going to ditch their sexes. They're going to really double down into hardware cold storage wallets, but everything else is going to go to the Robin Hood of Bank of America, Rainmaker, or whatever these things end up being. And my heart kind of breaks a little thinking about the purest ideals. Like right now, we're deliberating as decentralization to decentralization of the code, the protocol, or the decision making on the pools, or I'm like, no, what about the philosophy that drives us to degen? And if we're not talking about what happens to the philosophy, then pragmatically, people start giving ground on data privacy because we're not sticking to the principle. We're starting to get nuanced and, and not just data privacy, but like control, permissionless, trustlessness, what happens to all of these things. And I foresee that it is going to go underground. It's going to normalize in the next bull run, and we'll have to hunt for our tribe of true degens who still hold true to the principles, I feel like. And that's kind of what I'm thinking as these principles go. Now, maybe not. Jared's rolling his eyes. Maybe in Latin America and maybe in these, non-Western countries or non-established global North, maybe they're like, no, man, we're living on these principles. I don't know. What was your thought when you kind of took that look?
I mean, most of the world, billions of people live in the informal economy. They're already underground. The United States is only 5% of the world population.
Interesting.
It's a very nuanced view to just say, I mean, billions of people, I'd say more than half the world's people are already underground. They're already using cash. They're already using digital apps that are kind of like Venmo, that are kind of decentralized, where you can put money into. I have an app now on my Colombian phone that is just a digital wallet that I literally can just put money into, put cash into, and then exchange it once it's in there. But it doesn't have a routing or an account number. which is fascinating, which breaks our entire like US bank paradigm of how you send money to people.
Yes.
So I
Yeah.
would say the world's already there. And if anything, I think decentralization is gonna, it will, some of these projects, like I'm saying, Bitcoin, Ethereum, USDC, sure, will get sucked up into the bigger banks of the world, but a lot of these projects are going to continue to just keep being what we call degen, but most people call survival. So I don't know. I guess I want to roll back your comment and say I think it's a pretty U.S. centric comment, and that like 70% of Colombians are in the informal economy. A lot of them do not have bank accounts. They have
Interesting.
these type of money apps where you're literally just taking cash and putting it on like this app, and then you can exchange that. Like if we go out to eat, you could pay Aussie and I through that, but it doesn't have an account or a routing number, and you just need your license to basically set it up. It's a completely new way. But when you think about instead of going the routing and the account to just using your license number, I use my national ID number. All that number is just a hexadecimal code that we already use, the 32-digit Ethereum wallet. So I think the world is already, I guess my final point here is that the United States is really behind on digital value exchange at lightning speed. It's really, really behind everything I see and people
Lightning
I talk
speed.
to.
Well, and that's
Yeah.
interesting, and you're right, but it's not just the United States. I was talking to a mutual in Europe, and their business largely they get paid in USDT, because a lot of this person's clientele are crypto industry clients, and this person was describing to me the 4, 5, and sometimes 7 day reconciliations that have to happen with crypto, and I'm like, why is that? Is it the crypto, or it sounds like the case you're making is no, it's crypto entering the system and converting to a fiat standard. Go ahead, Jared.
No, it's exactly that. I was going to say it's just the on and off ramps and getting through our current traditional system, which doesn't really know how to handle this. Our current system doesn't know how to handle. Our current system is just it's middlemen and middle women, middle people, I guess we'll say,
Persons.
and this middle persons. And our new system is just like P2P. Oh, Aussie, I owe you $100. Let me just send it to you on ETH. Great, it'll be there in 7 minutes. I pay a network fee, but that's cutting out. That's the network fee is the middleman, right? The trust in the network is the middleman.
Yeah.
Brian says, an internet where users own their own data, not corporations, global digital transactions are secure. Online exchanges of information and value are decentralized.
Yeah.
Interesting.
He was referring to the Web3 Foundation, which the link is below, and mentioning Gavin Wood, who believes in this, who originally coined the term Web3, runs the Web3 Foundation. But he's not alone. Tim Berners-Lee, the inventor of what we know as the internet, has largely come out that it has devolved and is a huge proponent of these systems as well. I wouldn't be surprised if he is floating around organizations like the Web3 Foundation. So the link is there. Guys, we're at the top of the hour. This was beefy. This is beefy for Fun Free for All Friday. Jeez.
I mean, I'm literally under a bunk bed. I'm in a lower bunk of a bunk bed. This is as freaky as it gets. And you know what? We've got to kind of shout out the fact that Jarrett is going to get a whole lot more bougie on us starting next week.
Yeah,
He's
fancy.
he's joining the bougiest of content creators filming on rooftops because roofs. No one needs
Rooftops is just where it's at.
Yeah, you just got to be on a rooftop.
People who like rooftops, Mary Poppins and me, super bougie.
Yeah, level 10. You just gave a quick shout out. I'll give a quick shout out. Quick shout out to the Brian Naughtons of the world and anyone trying to hold down. I say hold down. Anyone trying to hold true to the core philosophies, because I consider myself a realist, and an opportunist, but I do love the core philosophies of crypto. As a realist, I think a lot of this, well, we've said many times, all of us have in different ways, that this is going to blur and abstract into their own respective industries. And so I am an idealist at heart. I want these principles to stay true, even though that's going to happen. So anyone out there who's still waving the banner and flag of crypto principles, I appreciate you. That's my shout out. Jared, any shout outs today? Ripple.
I don't really have any shout outs. I was actually just texting Owen Healy super quickly there and just kind of checking in with him.
Good.
I guess my shout out would be for you guys. Hopefully you guys get to come down and we can do a rooftop session
Yeah.
a rooftop shindig. And if Tristan's out in Panama, he could always drop over. He could.
Boom.
It's probably big enough if he wants to bring his helicopter. So he's welcome. I think that's a far
Some
away for a
Edison light
helicopter.
bulbs.
But
What's the beer of choice down there?
of where? Colombia?
Colombia.
There's multiple, but our Bud Light's called Aguila, and then there's these things called Club Colombia, which is like it's like a Heineken of Colombia. It's pretty good.
Yeah,
And then there's a lot of artisanal beer here, a lot. So
the DR, it was Presidente to
Presidente, yeah.
Presidente was the stuff, but I don't think that's
we have
bullshit. I think
Aguila, we have poker, and some other stuff.
we'll do it, boys. All right, everyone. Catch us next Tuesday. 3:30? Yeah, 3:30.
3:30
And,
Eastern time.
Yeah, and don't buy high and sell low on Ripple, please. Be smart. Don't FOMO. Yeah, the market's gonna soften up. Everyone, have a great one. Talk to you soon.